Hello, good morning. It's Bini here. Today, 4th of July. It would be probably a slow day because the US is not open. Right, so I'm just going to use this opportunity to talk about the use of Alom virtual limit order and how you can use it to your advantage. So this is a trade on oil, US oil. So we've put in a sell trade, a sell limit order. So just a few things in this video. Number one is that why we start to think that the oil could be bearish. Number two is that where we determine the sell limit order, and then how you can actually use $100, right, to double, to make like 2 or 3 times your risk. Okay, so first let's talk about why we think that oil is bearish. Oil being bearish wasn't covered the first time. It was probably I raised that up during the last Tuesday webinar, right? So my argument was that we start to see a series of higher highs here. Okay, so for example, this was a high, and then I'm just gonna skip some points. That's higher high here, and into this point here. So that's the lower low if you compare to this low here, and as well as this low. Even though overall the trend of oil, if you measure that over a longer period of time, is still uptrend. Even with the divergence indicator, it's still pointing a bullish trend continuation. However, when oil reached this level here, so the situation was different, right? Because I raised up that we're gonna have a resistance over here due to this level here, and the fact that a lower low was formed. So this was that lower high, all right, versus the previous high that we were looking on for short. All right, you can review last Tuesday, all right, the Alien Room webinar. Okay, I talk about specifically into this particular trade here. Now, so if you look into a candlestick chart, so what could have been done on a retracement upwards was to look at a wash and ins. Okay, so obviously there was a wash and ins here, so price had a close above the high here, hit right into a resistance and then come back down. Okay, so the wash and ins was shown in the H4. So you can see that there was a wash line being drawn here. So price was pumped up, okay, pumped up to hit right into this resistance here. Let me just point to you, where is this resistance? It was a very obvious one. Okay, so that was the resistance over here. So that wasn't obviously pushed up in terms of price. Okay, and then after that it slammed down. Okay, the only problem is that during the confirmation bar, the bar that closed below the opening bar low, and as well as the green line happens on the last candle of the day. So there won't be any signal, even though we know that there was a wash and rinse going on. All right, then we had 3 H4 bars of near to like a doji, and finally, it had a confirmation. So you can be shorting into this level here. Okay, and obviously it hit to a support, right? Okay, then the next question would be, if you like to continue with this particular short, what can you do? Because obviously when price hit into this level here, that means that hit into this low level here, you know that there was a bearish signal, a bearish confirmation signal here already. Okay, so that's the like 2 bars of down. All right, so what you can do is that you can use Alom, which is the new version, with virtual limit order. Okay, the question will always be, where should I place my sell limit? Okay, if I think that it is actually bearish. Right, so there are a few things to do. Number one, okay, you can use the wash line. The wash line are definitely very, very useful. And all those short little lines that are being drawn by TOR 3.0 in the day chart, they are very strong levels. Okay, so for example, when price had a day close that's of this long bar here, right, then what we did is that we took the retracement. That means that, okay, we missed out this one, then we asked ourselves, right, where would be the best place for us to put in the trade where it would still be bearish? So we don't want to put in a trade, right, at a place where it can be bullish already. That means that, for example, it's not logical to put in a trade for sell limit somewhere around here. Okay, why is that so? Because if we put a sell limit here, then it means that it will be higher than this bar high. Okay, because this was the bar that show us a bearishness. Okay, and then the sell limit was put in this bar here. Okay, sell limit order, not SL, but a limit order here. All right, so it can't be put inside this level here because it means that if it's here, okay, there might be a tail, but if it's unlucky, then we might end up with a solid bar that closed above the previous high. Right, so the logical level to put in a trade would be to assume that this bearish bar was still valid. Okay, that means that we will be putting in at the magenta line here. Okay, all right, so that's the logical level. So you can flip into a H4 time frame. All right, and then we use the wash line to help us put in the limit order. Okay, so for example, take a look at this day wash line here. So this one was formed, all right, because it had a close. Okay, so you will be able to see that wash line when there was a close here. Let me just refresh that. Okay, see, when there was a close at this particular bar, all right, you will be able to see this day wash line here at 110.26. Okay, now, but more important is to understand, okay, what happened. What happened was that there was a resistance here. So this was a resistance, all right, and then price had a wash and rinse here. Okay, so that's a WR, all right, of this resistance. Okay, now next would be that here, this place here, so this particular green line here, all right, there was another even more massive WR. Okay, this was the bigger WR, and price had a close below the green line. Okay, so you can use all these wash lines as a reference to help you. And then the nearest wash line in this case would be the green wash line, because if you put in a sell limit at the green wash line here around 110, then it means that you are thinking that price is still going to be bearish, and that these wash and rinse, okay, the bearish wash and rinse will be still true. Okay, so all these wash lines, including that day wash line at 111.77, would be all relevant levels for you to put in your sell limit order. Okay, it's all about whether you are more enthusiastic to get it or whether you want to hope for a better price. All right, so sometimes if you put in at the higher level, you might not get that sell limit trade, even though you get a wonderful price, but you might not get a trade. So it really depends on yourself, whether you are more interested to get that trade that you are waiting for some time, or you want to get a better price, but with the risk of, with the possibility of totally missing out the trade. All right, so it really depends. There's really no right or wrong answer. Okay, so for us, we put in a sell limit at the round number at 110. Okay, so let's take a look at the trade here. All right, so these are the trades, as you can see, in this particular trade. All right, where we used to grow a small accounts, we are not using a lot of V's. Okay, where we are using $100 V's here. Okay, on a small account. All right, the account size is about $2,000 only. Okay, $100 V's is the maximum that we want to use for this. In fact, using a $100 V's is actually very high. Okay, that means that if you take a look at $100 out of $2,000 account, that's like 5%. Okay, so this is the maximum that I really recommend. All right, that means that no more other trades except this one here. Okay, so you can see that the limit order, all right, was at 110. Okay, so take a look at the left hand side. So there was this sell limit order key in at 110. So in fact that the trade was filled at quite some nice price, around 110, and slightly higher than that. Okay, and it broke, it split into 4 contracts for each split. Okay, so a total of 12 contracts were done, but 4, and then where is the stop loss that we key in? Because we key in a sell limit of 110. All right, and then what we did was that, let me just show you the, okay, so we key in a different stop loss buffer, okay, because we knew that the place that we're going to place in, which is the 110, all right, we can't use ATR stop loss, okay, because ATR stop loss has a fixed buffer. Okay, by putting an ATR stop loss, the trade can't get through. Okay, but if you put a fixed SL buffer, all right, that means that we from the highest high of that day, okay, we will calculate in a stop loss buffer. All right, so that's 500 points. That's equal to 50 pips, like, that's the 50 cents in oil. Then that's where we have our stop loss. Okay, so you can see that it's a 50 cents stop loss, okay, from the entry price. Okay, so we are willing to risk 50 cents from our entry price. Okay, so this is how you use the fixed SL buffer. Then it gives you to say how much you are willing to risk for this particular trade. So because in the oil, we know that anything that's above 110 is not very good already. All right, so we can go back to the oil to check that. Let me just show it the oil chart. All right, so you see in oil chart, we have day wash as 110.79, and then the other day wash as 110.26. All right, so what you can do, if you are selling limit at 110, all right, for us, we took a slightly higher risk. Okay, we put it at 50 points. But if you don't want to take such a high risk, right, so you can do to say I want to sell at 110, and my stop loss would be let's say 800 points, okay, which is 80 cents, right? Because you know that the day watch is 110.79, you want to put it higher than 110.79. Okay, perhaps that you want to put it at 111, okay, or you want to do it at 110.90. So you can put as 900 points, which is 90 cents above your entry price. Okay, so we have the sell limit at 110, and your stop loss would be 110.90. So that's 900 points. So you can define that, and by defining this, right, you will be able to let Alom automatically calculate the lot size based on your defined risk amount. So I want to risk like $100 here. So the risk amount would be still capped at $100, maximum $100, but the stop loss and the it's determined by you already, and Alom will automatically determine the lot size, okay, and interim profit target. All right, so when you get all this done, all right, it will help you open the trade. The only thing is that the trade was open actually on a Friday, so it consumed that full swap, which is actually the cost of shorting onto oil. Okay, so that's not very good news, but otherwise it worked well because it helps you to put in that limit order. Second thing is that you are able to know the interim profit target, and third, you will calculate the lot size properly for you, right, when you define what you want your risk to be. Okay, you want your risk to be $100 based on your stop loss, all right, and then they will automatically calculate the lot size for you. So therefore, I'm still encouraging that you use this to place your trade. The only problem is for virtual limit order, you need to have your computer switch on. That means your server switch on, your mini PC switch on, all right, in order to make sure that the virtual limit order can be filled, right, when price hits that level that you want. Okay, so do download the latest version, all right, of Alom and upgrade that